building is. I do pay
That's
for the
interesting.
gym in which the Peloton lives, though, and I fight people for it. Every single time I want to use the Peloton, it is a game of elbows.
Well, okay, so it's still popular. Taking a look at shares of Amazon, they're actually their lowest, going all the way back to 2020, lowest since March 16th of 2020.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ all lower. Throughout much of the session, I've been telling you that the Dow is swinging between gains and losses. No longer the case. 13 minutes to go. The Dow now down by 81 points, a drop there of 0.2%. Stock market extending losses from yesterday's incredible day with the Fed and that more incredible news conference. The S&P down 30 points right now, drop there of 0.8%. NASDAQ Composite Index down 151, down 1.4%. NASDAQ 100 Index, full of big tech names, down now by 1.7%. Among those names, Apple lower by 3.9%. The 10-year, 4.12%, but look at the 2-year, 4.70%. Worth repeating, 4.70 on the 2-year. Spot gold, $16.31 the ounce. West Texas Intermediate crude down 2%, 88.17 a barrel. Brent, the global benchmark, down 1.5%, 94.68 a barrel. A ton of earnings after the closing bell today. Starbucks up 0.5%. We'll also be hearing from Microchip, MetLife, GoDaddy, Cloudflare, Amgen, GoPro, and Dropbox. Also reporting after the bell, Expedia Group. Recapping, stocks lower with the S&P down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Countries around the world have been experimenting with ways to ease the pain of high energy prices, with one solution getting increased attention: windfall taxes. The idea is to demand a surcharge from companies that have benefited from high energy prices, then use the proceeds to aid ailing consumers or businesses. Russia's invasion of Ukraine created a boon for the energy industry. Surging profits have resulted in billions distributed in dividends or spent on share buybacks, but the benefits of windfall taxes are very likely less than advertised. Such a tax evades all the difficult problems the Western world must confront as it tries to wean itself from Russian energy. A windfall tax is no solution at all. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It's that time already. Less than 10 minutes ago until the bells here. For our drive to the close, we are very pleased to be joined by Mona Mahajan, a senior investment strategist at Edward Jones. She joins us this afternoon via Zoom from Warren, New Jersey. Mona, good to have you with us. How are you?
Great. Thanks for having me. Great to be here on a beautiful day.
Beautiful day, maybe outside. Beautiful day here at the office. But you take a look at the markets, and there's not a lot of beauty to see. How do you explain it?
Yeah, look, it was a big week in markets, and the Fed was probably the culprit of what's causing not only yesterday's volatility, but some of the follow-through we're seeing today. We went into yesterday hopeful that the Fed would move at a more moderate pace going forward. Well, we got that message loud and clear from Jerome Powell, but we also got the messages that not only would they perhaps be moving at a more gradual pace, but they would be doing so for potentially longer, moving rates higher than what they had outlined in the September meeting. And interestingly, I thought it was notable that Jerome Powell outlined that the risk he sees, at least, is to ease and pause too soon, rather than over tighten and then have the ability to cut rates later. So clearly his bias, and perhaps out of the FOMC, is to keep moving forward, of course, until we start to see that infamous inflation CPI print start to move lower at a more consistent and clear pace.
And so, Mona, can I tell you how wrong I was? I had been, hearing and seeing chatter about peak hawkishness, for
Really?
example. Maybe that, Jerome Powell would somehow make some sort of nod to that pivot trade. Maybe that they would dial back the pace of rate hikes. It feels like we almost got that in the statement. That quickly went away as soon as he started talking. But when's your timeline for when maybe we do start to discuss peak hawkishness in the rearview mirror?
Yeah, look, I think the bottom line is we're certainly closer to the end than we are to the beginning. So that's the good news for investors. Keep in mind the Fed's already done 400 basis points in the span of probably about 8 months. That's pretty unprecedented in terms of pace of tightening. But of course, inflation has remained sticky. It's broadened out to some extent. But keep in mind, and the Fed did acknowledge this, that there are lag impacts, not only from their rate hikes, but also the CPI prints that we're getting don't quite reflect some of the underlying fundamentals that we're seeing. Certainly areas like housing, parts of even the rental markets are starting to show signs of softening, weakening. Some forward-looking indicators of inflation are starting to roll over. We're seeing it in, ISM prices paid in manufacturing, at least, certainly in supply chain pressure indices. Even areas like inflation expectations are moderating. And so, good signals. ISM prices paid in manufacturing, at least, certainly in supply chain pressure indices, even areas like inflation expectations are moderating. And so, good signals, leading indicators, we would love to see them show up in the CPI prints ultimately. But I think we're, probably, hopefully in the next couple of quarters, close to that peak hawkishness.
Okay, so give us an idea of what you're thinking about when it comes to the terminal rate and how long the Fed will keep interest rates there.
Yeah, I think interestingly, the market didn't really move much in terms of the terminal rate between, let's say, Monday and Tuesday of this week, and then, after the Fed meeting on Wednesday. We're still at about that 5.25% terminal rate for the Fed funds. And how we get there could be interesting, whether it's, 250s and a 25 or 75 and a couple of 25s. But I do think that we're probably headed towards that 5%, and maybe it's 5.25% level. Just so, the CPI, giving some time for the CPI inflation prints to catch up, but hopefully also for that supply picture to fully, get back into shape as well. And so I do think we're heading towards that direction, but keep in mind, historically, when we do hit peak Fed funds rate, whenever that may be, whether it's March or sometime in mid-2023, Historically, the 12 months after we hit the terminal Fed funds rate has been very good for markets. In fact, S&P 500 is up on average about 15% in that 12-month period following that peak rate. So we're heading towards, that type of backdrop, hopefully in the months ahead.
So what do you do in the meantime? Where do you position your portfolio and kind of hang out a little bit?
Yeah, absolutely. First and foremost, of course, for longer term investors, trying to time yourself in and out of the market is much tougher than, probably time in the market. And keep in mind, when you do try to go in and out, you have to make two decisions. You have to decide the best time to leave and the best time to re-enter. And, timing markets, as we all know, is notoriously difficult. But what we would say for both equity and bond investors, there are interesting opportunities forming. In equities, there has been this concentration and probably relative outperformance in the value and defensive parts of the market, certainly energy, but also areas like healthcare, staples, utilities. Over time, we would think that as yields peak, Fed funds peak, and start to stabilize and potentially roll over, that's a better environment for growth, and we would say quality growth. So start maybe thinking about the opportunities forming to complement, maybe not wholesale shift out of your value and defensive. Similarly, in bonds, a lot of concentration in that shorter end CDs, 1 to 2 year bonds, which have been providing very interesting value. But as we get closer to peak rates, there could be value in that longer duration trade as well, especially in the investment grade space. So
start thinking about opportunities forming in the equity market. At what point do you start to deploy that capital?
Yeah, absolutely. Look, we'll probably get bouts of volatility between, call it now and year end, now and peak Fed funds. And those are the opportunities that you have to look for to deploy. And we do think as people, as investors are starting to plan for a year ahead, that tends to be a time where money flows into the markets. And we tend to get, and we hear Santa Claus rally, various terms for this, but that's really when people start to think about their 2023 portfolios. And so perhaps you start thinking about it in the weeks ahead of the new year as well. But also keep in mind we have midterm elections coming up next week as well. And historically, that's been a good time, the 12 months post-midterm elections. And this year, it may coincide with hopefully a peak in Fed funds rate and also a potential rollover in inflation, more meaningfully at least.
Mona, 20 seconds. What is the pain trade right now?
I think people are still positioned for volatility. And so maybe a move higher, or at least straight higher, would be more painful for a lot of investors, especially after yesterday. I think a lot of bets were, or at least more bets were on a Fed moving more in a more dovish direction, and they got the hawkish tilt. So keep in mind, volatility probably not going away anytime soon, but that's the opportunity.
All right, Mona Mahajan, Senior Investment Strategist at Edward Jones, joining us via Zoom from Warren, New Jersey. Check her out on Twitter, Mona Mahajan View on Twitter. Coming up, it's our countdown to the close, Beyond the Bell, right here on Bloomberg TV and Bloomberg Radio.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell is our global simulcast with Tim Stenevik, Katie Greifeld in for Carol Massar today, and we welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and on Quick Take. A lot of movement here today, Tim, in the equity markets and, of course, in the bond markets as well. But right now, you're looking at stocks right around the lows of the day, particularly when it comes to the NASDAQ 100 and those big cap tech names.
Yeah, perhaps a little surprising for people who tend to think that, okay, investors are sitting back and waiting for what we see when it comes to those non-farm payroll numbers tomorrow, but still seeing, the S&P 500 down more than 8%, but the real loss is happening on the NASDAQ, Katie.
It is interesting. I mean, after the S&P 500's worst Fed day performance since January 2021, to see a continuation.
You should write an article.
Since 2021?
You should write an article.
2021. Wow. I did. It was great.
Did.
Everyone read it. Go check it out. But in any case, it is interesting to see sort of that conviction carry through into the next day. Usually you see a reversal this tightening cycle. Not today, though.
Take a look at two-year yields. You're now up 9 basis points on the day. We've been creeping higher. It was 6, it was 7, it was 8, it's 9. Now at a 471. So really the highest yields that we haven't seen since 2007.
What does that yield curve inversion tell you? The further inversion,
Yeah.
I should point out. We got down to, what was it, negative 58 or something on the day here. What does that tell you?
I thought our guest from Loomis Sales said it really well, that it's signaling that eventually there is that mistake, that eventually there is a harder landing, and it's a market that's trying to figure out how hard that landing is going to be.
Today, we landed hard on the benchmarks.
Absolutely. And one thing I think is interesting, too, about some of the equity down days that we had over the last 3 days prior to this and even before that, was that on those days that we were in the red, you still had the number of stocks in the S&P 500 that were higher outnumber those that are lower. That is flip-flopping today with about 300 names in the red. The S&P 500 going to close lower by 40 points or 1% here on the day. The Dow Jones Industrial Average down about 0.5%. The NASDAQ Composite down almost 2%, 1.7%. And the Russell 2000 that had been one of the bright spots here, as a lot of people did try to sort of rotate back into the most smaller cap and some of those cyclical names, lower by 0.5%.
We just spoke with Mona Mahajan, Senior Investment Strategist over at Edward Jones, and she predicts volatility between now and the end of the year, Taylor, but she could see some opportunities post-midterms because she talked about the seasonality and the trends that we tend to see post-midterm elections.
Really interesting. Let's take a look at where we are in terms of the individual sector level here, as I know that we're waiting some of the other quarterly results that will come through. It is what is old is new again. Take a look at this. It's energy, it's capital goods, it's materials, it's transportation. Those are the sectors within the S&P 500 that are leading the gains today. To the downside, those you can see there in the red, it's the same story. It's media and entertainment, software services, technology, and hardware as well, when you think about the big tech laggards on the day. I think I just want to get to quickly Expedia, Katie, and then we'll come to you as well. When we got the great numbers out of Booking Holdings yesterday, third quarter gross bookings now out of Expedia look a little bit light. 23.9 billion. Estimates had been for above 25 billion. All the way down to the bottom line, again, a small miss. Third quarter adjusted EPS of 405. Estimates have been for 407. And Katie, finally here, third quarter revenue, maybe just right here on the nose, 3.6 versus estimates again of 3.6. But clearly less of a big winner than we got from the booking numbers yesterday.
Yeah, and you can see Expedia shares moving lower post-market. Let's get to some of the gainers, though, because there's a few interesting stories I want to highlight. Peloton, how about it? Revenue forecast was weaker than expected. You had Wall Street spooked about the company's cash burn, but somehow the company ended up 8% higher. I'm not exactly sure why. You did have the new CEO, Barry McCarthy, come out and say that the turnaround, it's a work in progress, but the ship is turning. Maybe that explains some of what's going on here. But in any case...
Yeah, I'm just going to interrupt you. Sorry, Katie. Just some more breaking news. This is actually on Canada. We don't pay a whole lot of attention to their budget proposals, but this one is interesting. Canada is going to impose a 2% tax on stock buybacks. This would actually go into effect in January of 2024, so more than a year from now, but a significant move should this sort of go through to kind of bolster the country's budget, and more importantly, to address, I think, some of the issues that we're also dealing with here in the United States with regards to at least how the government views some of these buyback trends. We'll keep an eye on that, but we do want to get back to some of the movers and some of the earnings crossing the wire, Tim.
Yeah, well, let's go to some of the decliners right now. I want to talk about Amazon because the company's shares closed down 3.1%. It's its longest losing streak going all the way back to 2019. Think back to last week when the company reported its slowest growth for the current quarter in its history. That has spooked investors. The company over the last 7 days, has lost 25% of its market value and has fallen below $1 trillion in market cap. Paramount Global finishing the down today, down by 3.5%. It did fall more than 12% yesterday after profit and sales fell short, but at least today, what we're seeing is at least four firms cutting their price target on the company. And then Shake Shack, it's an inflation story, reported earnings this morning, shares falling 8.2% today. The company did say that it expects, quote, modest ongoing pressure to our Shack-level operating profit margins for the next several quarters.
Let's get to what is a story of cross-asset moves and basically everything under pressure. If you're looking in the sea of red that is the commodity space, that on the back of a stronger dollar. Now we are seeing some little bits of milk is on the upside, you'll be pleased to see, and heating oil. But in general, oil is on the lower side, wilting under the pressure of a worry about growth. We see WTI off by more than 2%, Brent off by 1.7%, and then go across to the FX space. Everything in the red apart from Bloomberg Dollar Index that is stronger to the tune of 0.6%. I'd train your eyes to the second one there, the British pound up by more than 2% on a day where they hike by 75 basis points in the UK as well. The first time they've done that since the late 80s. But they're more worried about the growth trajectory of the UK and more worried about a Federal Reserve that remains so much more hawkish vis-a-vis the rest. Sovereign bond yields pushing higher across the board, whether in Germany, France, Denmark. Interesting comments, of course, coming on inflation from ECB's Lagarde a little bit earlier.
Still getting and waiting for some big results out of Starbucks. In the meantime, of course, take a look at the yield story. This was such a full faith and credit kind of day. Again, coming off of the huge comments that we got from Jay Powell yesterday, it is a 2-year yield that again resets higher. I think we're higher now for about 5 straight days, I believe, Romaine, as I know that we're getting some Starbucks shares, but it is also a big inverted yield curve as well under pressure.
Yeah, Starbucks earnings crossing the wire right now. Their fiscal fourth quarter comp sales, they were up 7% here. Overall, the street was looking for 4%, so a big beat there by about 3 percentage points on comp sales. As far as the revenue, it's coming in at $8.41 billion, slightly higher than the 8.3 consensus estimate that the street was looking for here. Now, of course, we know the international story has not been good. International comp sales were actually down by 5%, but that was actually a little bit better than what the street was looking for. 8.23% is what the street thought they were going to hit. So overall here, the story for Starbucks appears to be the same. Overall growth, a lot of weakness in the international segment, but enough going on here in North America to compensate for some of the international softness.
Yeah, really interesting to hear. Really interested to hear from executives on the call about what's going on in China. I do want to point to what Howard Schultz, who is back for a 3rd time as interim CEO, he mentioned partners in the earnings release. That's, of course, people who work at Starbucks. He said, reinvention will touch and elevate every aspect of our Starbucks partner, customer, and store experience, and ideally position Starbucks to deliver accelerated, sustainable, long-term, profitable growth and value creation beginning in 2023. Yeah. He has been on a mission to work with the partners at the company as there has been this labor movement across the country to unionize those workers.
Let's have a little look at what's the artist formerly known as Square, now called Block. 3rd quarter adjusted earnings per share coming in at a big beat, 42 cents. The estimate had been for 22 cents. Adjusted EBITDA coming in stronger. Net revenue, $4.5 billion. That's basically just ahead of expectations. And the transaction revenue coming in line with $1.5 billion. This is a company that's adding subscribers overall, a revenue beat, and we are really seeing the shares up 4% after hours.
I want to also jump in here on Coinbase as well, Caroline, as we await some of those numbers. Right now, it looks like we're getting just the revenue numbers. Looks like a little bit of a miss here. $590.3 million for 3rd quarter revenue. Estimates have been for almost $650 million as well. So we're going to continue to dive into the press release, but for now, it looks like a little bit of a miss here, Katie.
A little bit of a miss, but still you can see Coinbase shares up 1.2%, now up 2% or so. So it'll be interesting to see how that changes as we get the drip feed of those earnings.
And I think, and just real quickly too, I mean, we did get a couple of smaller earnings, and it gets to the broader picture. When you have a company like Atlassian missing, the idea that software spending would be resilient, those shares down 11%, and then you had Skyworks also missing on its forecast, and those shares down a couple of percent. So a big read here into the smartphone market, Caroline.
Yeah, it's notable, isn't it, that we're starting to see some of these companies. We still await PayPal. What is a consumer saying? What does an activist investor do for that particular business? But the fact that in fact, we've been watching the IBMs and some of these corporate-focused businesses do rather well. The fact that we aren't seeing that with Skyworks and the like. We're looking at Block overall, and in 3rd quarter 2022, they are saying they saw a gross profit up 38% over year. Cash App generated gross profit $774 million. That's up 51%. So still, when you're looking at an SME, that's doing pretty good, as well as peer-to-peer transactions.
All right, the earnings story not quite done. As we mentioned, we are still awaiting some companies. We'll bring those to you live as they do cross the Bloomberg terminal. In the meantime, that is going to do it for our Beyond the Bell coverage. Tune in tomorrow, same time, same place, available on Bloomberg Television, Bloomberg Radio, YouTube, and on Quick Take.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Take's Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio. Katie, you were not able to finish your gainers because there was some breaking news from Canada.
From Canada, yeah. What is that news?
It's that the the country, is going to tax share buybacks.
2%.
It's going to impose a 2% tax on stock buybacks. That starts in January of 2024.
Yeah, so non-imminent, nothing to panic about right now, unless, of course, you're a company trying to buy back your stock, I suppose.
In 2024.
Yeah, so plan ahead.
Get a 2% tax on that. All right, lots of earnings crossing the bell. We're going to continue to dig into those and bring them to you live as they cross. We are not done with earnings season yet. In the meantime, let's get to world and national news. Nancy Lyons is standing by in our 99.1 studio. Hey, Nance.
Thanks, Tim. U.S. Defense Secretary Lloyd Austin says any nuclear attack on the U.S. or its allies by North Korea would, quote, result in the end of the Kim regime. He was reacting to another barrage of missile tests carried out by North Korea or the DPRK.
It's highly unfortunate that the DPRK has chosen to interrupt this solemn period with the illegal and destabilizing launch of an intercontinental ballistic missile last night, as well as additional missile launches today.
Secretary Austin says the U.S. remains fully committed to the defense of South Korea and plans to return to large-scale military exercises on the peninsula. Members of Gabby Petito's family have filed a $50 million wrongful death lawsuit against police officers in Moab, Utah. Gabby Petito's father, Joe Petito, says they feel the officers did not do their job when they encountered Petito with her fiancé, Brian Laundrie, last year.
Changes haven't happened, and those changes need to come. And unfortunately, this is the way that's the best way to have those changes made.
Joe Petito says the officers involved did not fully investigate the threat that Gabby Petito faced from her fiancé. Soon after being stopped by officers, Petito went missing. Her body was later found on the edge of Grand Teton National Park. Add another couple names to the list of suitors for the Washington Commanders' NFL franchise. People magazine is reporting Amazon founder Jeff Bezos is interested, possibly with music mogul Jay-Z as an investor. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. You get your lottery ticket yet, Katie?
Oh my gosh, so this is so funny. Actually, my husband and I, we do buy a lottery ticket every time.
Every time?
No.
Okay. I cut you off. Sorry.
Yeah,
Please,
calm
go ahead,
down,
Katie.
Tim. Every time a jackpot is over like $1 billion or so. Joe has it all calculated out, like how the taxes would look, so...
That's called putting the cart before the horse. Like, he has the spreadsheet.
Well, he's like, I'm not going to waste our money if we'd end up having to pay mostly taxes on it.
Well, you don't have to pay. I mean, who cares if it's mostly taxes on $1.5 billion?
Yeah, no, that's what I'm saying. So if the jackpot is a certain amount, then we'll buy a ticket.
Okay, so one ticket? How much is a ticket? I don't even know. Are tickets $1?
Ask Joe.
I'm asking the control room right now. $2 for a ticket.
$2.
Okay. All right, thank you.
It's a pretty good return on investment.
If you win.
Yeah, for sure.
Okay, well, the jackpot swelled to an estimated $1.5 billion after no winner was declared in yesterday's drawing, so it's closing in on a record payout. As Americans flock to buy tickets for the next drawing on Saturday, it's a good idea to think about how you would manage that much cash, and in the extremely unlikely chance, all right, 1 in 292 million that you win.
I think, like, if you just manifest hard enough, you got your crystals in line that you could win.
There was one day I thought I would win.
Really?
Yeah, and I started, it was like, 6 or 7 years ago. I started playing it out.
Why did you feel so
I don't know.
good
I just felt
about
so, because I never buy these tickets, and I was like, oh, so I'm going to buy a ticket. And
you were like, I, Tim Stenbeck, am the chosen one. Can
Spoiler
I tell you
alert,
something, though?
I did not win.
Well, that's why I thought you were just here for the love of the game.
Yeah, I mean, maybe I did win, and I'm not telling you. We did that story earlier this week about the guy in China who won, $20, $30 million.
Yeah, well, Tim, I wasn't here.
Okay. Well, I'll tell you what happened. He's refusing to reveal his identity, even to his wife and his child. He's worried that they won't work hard.
Well, apparently you haven't told anyone that you won, so that's pretty amazing. Can I just tell you, though, every single time we buy a ticket, which is not that often, but we buy it probably more than most people, every single time I think we're going to win.
Okay, well, diverse portfolio that includes fixed income, equities, and alternative investments. This is according to one expert at Marina Wealth Advisors in LA. Check out this story and more on the Bloomberg Terminal and at Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the closing bell. We've got you covered. DoorDash out with revenue that beat analyst estimates. Shares are surging after ours, delivering a 14% gain right now. Open Door Technologies reported third quarter losses that were steeper than expected after the housing slump led the company to sell homes for less than anticipated. After ours, we have got shares of Open Door down by 3%. By the way, the stock today trading at a 52-week low. Starbucks reported sales that exceeded expectations. Shares higher in late trading. They're up now by about 3.6%. Block Inc., the old Square, reported net revenue for the third quarter that beat the average analyst estimate. And just getting headlines on the Bloomberg Professional Service from PayPal. Third quarter total payment volume, $336.97 billion. Estimates were for $343.25 billion on PayPal. The Dow, the S&P, and NASDAQ all declined today. The Treasury yield curve inversion reaching a 4-decade extreme. Let's begin there. The 10-year 4.14% with the 2-year yielding 4.70%. Stocks lower, S&P down 39, lower by 1.1%. The Dow down 146, down 0.5. NASDAQ down 1.7%. Spot gold down $5 the ounce to $16.30, drop there of 0.3%. West Texas Intermediate crude down 2.2% today, 87.98 a barrel on WTI. Bottom line here, losing day for stocks. The S&P down 39, down 1.1%. That 2-year worth repeating, 4.70%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Tim Stenivek and Katie Greifeld in for Carol Massar this afternoon. We're live in the Bloomberg Interactive Broker Studio in New York. And we've got a real treat this afternoon. We've got Madison Mills with us. She's a correspondent for Bloomberg Quick Take, my Quick Take colleague. We call her Maddie upstairs. She's with us right now, though, in the Bloomberg Interactive Broker Studio. Check her out at Madison Mills 22 on Twitter. Maddie, you're doing something really cool right now. And the reason I say it's really cool is because, well, one, it's a great series that you're doing. But two, I think oftentimes when we talk about economic data, we talk just about numbers. And we don't necessarily talk about people and the people behind those numbers and the way that this economic data is playing out in their everyday lives. So your series, Inflation Nation, involves you going to cities across the U.S. hardest hit by inflation, and you talk to small business owners. Yep. Talk to us a little bit about this series and what prompted you to do it.
Yeah, exactly what you said, Tim. I just really wanted to make sure that I was getting a sense of how inflation was impacting consumers, small business owners at the individual level. Obviously, we talk about the Fed all day, rate hikes, et cetera, but what does that feel like when you own a small business that you've poured your entire life into, and now you're impacted by this insane inflation? So I looked at the Misery Index, which looks at high inflation and unemployment, and found that our nation's capital, D.C., is the #1 city on the Misery Index at 15%. So I went to Ben's Chili Bowl, which is an iconic D.C. establishment. Every single presidential candidate has to go through there. It's just the place in D.C. And I talked to Virginia Ali, who co-owns the restaurant. Kids love to get a chili bowl at 2 a.m. on a Friday, and she cannot find people to fill those spots. So at 88 years old, she was often filling in at 2 a.m. behind the counter.
Oh, my God.
I know.
Okay, so as you mentioned, this is taking you across the country. D.C. is really high on the Misery Index. Yep. Where else have you been, and where are you planning to go, Maddie?
So I went to Dallas. I went to the Texas State Fair where I learned a really cool inflation hack is using white wine instead of tequila in margaritas. Every single vendor was
tried it?
sneaking the system. I can't comment on that, Tim.
Yes, you can.
You're in a safe space with us.
Of course I tried
it's just the
and
two
I
of us
couldn't
and
tell.
a lot of
You
people
really
listening.
could not tell.
I couldn't tell, but
I'm
it was
gonna
frozen.
I'm gonna fact check this later.
It was
I
frozen.
feel like I would be able to tell.
We'll have to get you down there, Katie.
Yeah,
we'll
for
have to
sure. I would love to go to Texas.
Go to Texas. Go to the state fair. But yeah, we're going to go to Arizona. I'm going to Florida next week. So a lot of cities on the docket.
Can I ask one more question,
Oh my
Katie?
God, go ahead, Tim.
So it also, we talk a lot about what the polling says ahead of the midterms
Yep.
next week, and I know you're doing a lot when it comes to Bloomberg's coverage of the midterms. What did you find out was the connection between the way the people are thinking about the economy and inflation and how they're going to vote?
Yeah, I expected, and honestly, in the beginning, I started reporting this out a couple months ago, and some of the business owners I spoke with did mention social issues when I was speaking with them, things like abortion. In the past couple of weeks, it's all inflation all the time, all economy. I'm not hearing any mention of social issues, especially last week or 2 weeks ago when I was in Texas, it was just inflation, 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 and jobs. People are really focused on the economy heading into this election.
Where are you going next week?
Next week, I'm going to Florida. I'm going to Miami.
And that is for the midterms coverage.
That's for midterms coverage, but I'm going to sneak in some inflation coverage while I'm down there.
In a way, they're very, very similar.
Yeah, yeah. I mean, especially this election cycle, right? It's kind of one and the same. Yeah.
Maddie, in general, we have you for about 40 more seconds. Are you getting a sense of optimism from people, given that the economy is, you're shaking your head right now?
No,
Really?
I'm not
Because
getting that sense. Yeah.
We are still seeing that, even though prices are higher, we're still seeing that employment, is really strong. We're going to get jobs numbers tomorrow. But just wrap it up for us and talk to us about, overall what you're hearing.
Yeah, I think it's a reminder of, we talk about this more broadly, this idea of does the Fed have an understanding of what's going on in the economy? And when I look at and think about the conversations I've had with people, it's not good.
Well, it is a great series, and we really appreciate you stopping by to join us here on Bloomberg Business Week. You can watch Inflation Nation on Bloomberg Quick Take. You can go to bloomberg.com/QT, and it's on all the streaming platforms, including Apple TV, Roku, Samsung TV, and more. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenivek and Katie Greifeld in this afternoon for Carol Massar, who is on assignment today and tomorrow. Katie, we have a really exciting guest coming up next.
We are the guests.
We are the guests. Okay,
Yeah.
Spoiler alert. We're talking all about our new-ish series, Crypto IRL. We got a new episode tonight, 8:30 p.m. Wall Street time on Bloomberg Quick Take. Also tomorrow night at 8:30 p.m. on Bloomberg TV. We're going to tell you all about it. A little hint, it's about NFTs, and it's a pretty good one. First up, though, Charlie Pellet, we got a slew of earnings in the after hours. What's the latest?
And we've got you covered. The latest is PayPal forecasting revenue for the full year. The guidance missing the average analyst estimate. That stock plunging after hours, down now by 15%. DoorDash is reporting revenue that beat analyst estimates, a sign that customers are still ordering pricey takeout despite a squeeze from higher inflation. Shares jumping roughly 14% in extended trading. That is DoorDash moving higher. Starbucks out with sales that exceeded expectations as American consumers forked over more for their morning lattes, probably some afternoon frappuccinos as well. It reported higher economic-wide inflation. Shares up in late trading. Starbucks up now by 3.6%. And Expedia reported adjusted EPS for the third quarter that missed the average analyst estimate. Expedia after hours falling by roughly 6.5%. So lots going on in terms of earnings. Today we had the Dow, the S&P, NASDAQ all declining. A lot of that selling really coming in the final hour of trading. Stocks sank ahead of tomorrow morning's jobs data amid concern that a deeper recession could be in store. The jobs number, of course, hits 8:30 a.m. Wall Street time, and we have got you covered on that tomorrow morning. Again, recapping here, the Dow, the S&P, and NASDAQ all declined. S&P today down 39 points, a drop there of 1.1%. The Dow down 146, down 0.5. NASDAQ down 1.8%. The 10-year 4.14%, with a 2-year now yielding 4.71%. Spot gold down 0.3%, 16.30 the ounce. West Texas Intermediate crude down 2.3%, 87.97 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Tim Stenivek and Katie Greifeld in for Carol Massar this afternoon. And Katie, it's Thursday, which means a new episode of Crypto IRL premieres tonight on Bloomberg Quick Take at 8:30 p.m. Wall Street time.
I know I said that the Matt Levine episode was the best episode. This one was also pretty good.
This was one of my favorites. I don't have any favorite children, but I have to say that this one was really fun. A big part of it was the guests who we had and, of course, the topic. We discussed NFTs, and they've kind of mirrored the broader crypto world by crashing in value over just a few months. We were joined by a few different people, including a couple NFT, pro NFT folks, and then also an NFT skeptic. Listen to what former SEC enforcement attorney John Reed Stark has to say about his skepticism of NFTs. What is your issue with NFTs? What's your problem with them?
The problem that I have with the fact that you've got some sort of fractionalized hyperlink to a JPEG file or the metadata of a JPEG file as a representation of some sort of investment.
Yeah, what's your problem with that?
My problem with that is it's ridiculous. It's absurd. There's nothing to it. It's a giant scam. It's a giant Ponzi scheme. It turns victims into victimizers. It's one of the most absurd things that has come up. And it evolved from, they had initial coin offerings, but the SEC cracked down on those. And then, lending products and SAFs, SAFTs, the SEC cracked down on those. So it's just an end run around that with more nonsense, more crypto nonsense.
That's John Reed Stark. He's a former SEC enforcement attorney. He joined us for our latest episode of Crypto IRL. It airs tonight at 8:30 p.m. Wall Street time on Bloomberg Quick Take, and Friday night at 8:30 on Bloomberg TV. Katie, he said, my problem with that is it's ridiculous. It's absurd. There's nothing to it. It's a giant scam and a giant Ponzi scheme. Hey, John Stark, how do you really feel?
Watching that clip back, and I watched a little bit of the episode back this morning, I was smiling the whole time. He was just, the way he approached it was so funny. He didn't mince words at all. He was a great interview. But also, we had on Ian Rogers. He's the Chief Experience Officer at Ledger. I was also smiling a lot during his interview. He's the exact ideological opposite of who we just listened to, of John Reed Stark. He's obviously very pro NFT. He thinks that, collectibles, we're going to approach NFTs the same way we do vinyl albums and T-shirts one day. So exact opposite ends of the spectrum, and we got them both on the show.
Yeah, and Ian was a great guest as well, and he's worked for luxury brands in the past like Louis Vuitton and Moet Hennessy, and he talked about the luxury aspect of NFTs and the idea of collectibles. And I think what's so cool about Ian's experience is that he was like a 90s guy when it came to the early days of the internet. People who are, around my age will remember Winamp.
You're
which
40?
Is not 40 yet, but,
Okay.
I'm closer to 40 than I am to 35. But they'll remember in the 90s a program called Winamp, and it allowed us to listen to MP3s and waves,
I remember that.
before the Napster days. You don't remember
No,
that.
I don't.
You don't. You're lying.
I
I
was
know you're
just
lying.
trying to make you feel better.
Yeah, well,
'cause
it's
I
not
called you
helping.
40.
So I asked him what he would say to someone like John Reed Stark, people who are not buying crypto or buying NFTs rather, and he has this great answer. I don't give it all away, but he says, I said, what do you say to them? And he says, here's what he said. Honestly, what I say, eventually you'll be dead. He really said
Does
that.
that answer the question? I'm not sure. Would that convince anyone that NFTs are around to stay?
But what he's saying is it's very generational. And,
Yeah.
Kids who grew up during the pandemic, going to class on Zoom, glued to their screens, living in, the metaverse in this day and age, he says they're the ones who get it. They're the ones who are buying different skins in video games.
And this is something I think about a lot, because if I think, if I had been more conscious in like the year 2000 or when the internet was really becoming mainstream, I would have had terrible takes. I would have thought it was such a fad. I would have thought it was so silly. Why would you send an email when you can just pick up the phone and call someone?
Yeah.
I look at how I live my life now. I hate calling people, except if I'm being paid to. So there you go. I mean, I think it's a really... He put it very bluntly, but it's a very good point, a very true point, at least in my experience.
Okay, we also spoke, Katie, to an artist, an NFT artist, people pleaser. That's the name she goes by, but she was born Emily Yang. And she talked about how NFTs continue to remain a benefit to art in society.
Yeah, and it's interesting. It was interesting actually speaking to an artist, because how else would she have gotten her start selling her art, especially during the pandemic? I mean, she started online with NFTs. She wasn't going to necessarily get into a gallery straight away. So really important to actually get someone's experience, because, I mean, it's the same way what we were talking about with Maddie Mills. We talk about the numbers all the time, but to get to the people on the ground who are making the art, I really enjoyed that conversation.
I'm going to say it once again, this is one of the best episodes so far this season. It's Crypto IRL. It airs tonight at 8:30 p.m. Wall Street time on Bloomberg Quick Take, and then Friday night at 8:30 on Bloomberg TV. We got a couple more great episodes coming up in the next couple of weeks too, and we'll give you previews for those next week and the week after. You're listening to Bloomberg Business Week on Bloomberg Radio. Let's get to world and national news. Nancy Lyons is in our 99.1 studio in Washington, D.C. Hey, Nance.
Hey, Tim. A New York State judge says Donald Trump's company will have many of its business activities overseen by an outside monitor until New York Attorney General Letitia James' lawsuit is resolved. James has sued former President Trump and 3 of his children, accusing them of inflating the value of Trump Organization's real estate holdings. Well, Donald Trump's former senior counselor, Kellyanne Conway, says she expects the ex-president to announce a widely anticipated comeback bid for the White House very soon.
Donald Trump feels, I did it the first time, I can do it again. And if he runs a binary choice election, he certainly can prevail. If he just reminds you of life under President Trump and life under President Biden and sticks to those binary contrasts.
Conway says she advised her former boss to delay launching another run until after the midterm elections so as not to distract from Republican efforts to take control of Congress. As for the midterms, there may be a new sign of Russian interference.
The Internet Research Agency, the same Russian-affiliated group accused of meddling in prior elections, is using political cartoons to promote right-wing conspiracy theories. That's according to research shared exclusively with Bloomberg News by the social media analysis firm Graphica. One cartoon claims Democrat Tim Ryan would release drug traffickers from prison in Ohio. Another shows Georgia Senator Raphael Warnock threatening people who don't support Black Lives Matter. The cartoons are signed by someone named Schmitz. Graphica says it's unclear whether that's a real artist or a made-up persona. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. I want to bring you breaking news, redhead here on the Bloomberg terminal. This coming from Dow Jones Wall Street Journal. General Mills, Audi, and Pfizer are joining a growing list of companies pausing their ads on Twitter. Katie, we saw this last week when it came to GM, I believe, and that one kind of made sense because if you're a company that competes with Tesla, maybe you don't want to be giving money to Elon Musk. So Volkswagen's Audi, that one makes sense as well. But you're also seeing this temporary pause broaden out a little bit. General Mills, and then also Mondelez International, the snack foods company, and Pfizer as well.
And this is interesting. I mean, obviously, there was news earlier this week that Musk is going to restore content moderation tools. It had been blocked for some staff, but he had said that he was going to restore some of those tools by the end of the week. And we had some news from Insider reporting, actually, earlier this today that Elon Musk told ad execs at a Thursday closed-door meeting that he has appointed himself head of Twitter's video product. So trying to reassure those ad execs on brand safety.
What's Twitter's video product?
Do
you mean the video ad product?
I'm just reading the story, man.
Okay, or is it because he did talk about do you want people to bring Vine? Does he want to bring Vine back? Remember Vine, the 6-second videos?
Oh my gosh, yeah, it walked so that TikTok could run.
Yeah, I know. It's pretty remarkable to see the way that short-form video has taken off, right?
It is remarkable. And it is remarkable how quickly this story is moving. The deal just closed, it just became official, and we'll see if other companies follow in the footsteps of General Mills, Audi, and Pfizer, again, pausing their Twitter ads. That is according to reporting from Dow Jones.
Hey, I wanted to just bring another story here as we continue to follow the latest with Twitter. This one about how Wall Street bonuses are ducking New York City pay law that's aimed at wage gap fix. You might notice on some job descriptions, a salary range in New York City is now offered. It took effect on Tuesday, and it requires local employers to make a best estimate of salary range when posting job openings. Check out this story and more on the Bloomberg terminal and, of course, at Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Today we had the Dow, the S&P, and NASDAQ all declining, with the S&P falling another 1% today on top of yesterday's sell-off. The Dow down 39 points today. A lot of those losses coming in the final hour of trading. The Dow down 146, now at 32,001. The Dow was down by 0.5%. NASDAQ today down 181 points, a drop there of 1.7%. Stocks fell as hawkish bets revive recession fears on Wall Street. The 10-year is now yielding 4.14%, while the 2-year 4.71%. Spot gold down $5 the ounce, down 0.3% today. West Texas Intermediate crude down 2.3%, $87.94 a barrel. Lots of earnings after the bell. PayPal is forecasting revenue for the full year that missed the average analyst estimate, now down by 6.6%. PayPal, meanwhile, has announced it reached a truce with Apple, and the two tech giants will begin accepting each other's products in their separate payment ecosystems. DoorDash, after earnings, up by about 9% right now. We've got Starbucks after earnings rising in late trading, up by 2.7%. Expedia after earnings down 2.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Very pleased to be joined right now by Renee Johnson, a senior advisor at Public-Private Strategies. It's a consulting firm that works at the intersection of the public and private sectors. They work with companies, associations, small businesses, and more. Renee, it's good to have you with us, joining us via Zoom from Washington, D.C. How are you?
I am wonderful. Thank you so much for having me here today.
Well, we wanted to have you on the program to talk about the partnership that Public-Private Strategies, the institute there, has with the National Urban League and the National Minority Supplier Development Council. It's called the Build Up Local Initiative. Explain what that is.
Yeah, so this week, leading civil rights and business organizations came together to launch a new portal called Build Up Local. This announcement is timely as we approach the one-year anniversary of Congress passing and President Biden signing the historic bipartisan infrastructure law. This delivered $1.2 trillion, and I say that with a T, trillion dollars in resources for communities across the country to invest in infrastructure, creating jobs and opportunities for small businesses and contractors all over America. In the past, small businesses and contractors and communities of color have been left out of these opportunities that the government have created. And this is also part of where we know the racial wealth gap continues to grow. So as hundreds of billions of dollars go out to communities all over the country, there is a historic opportunity for small businesses and contractors here. It is imperative the Biden-Harris administration, civil rights groups, and business organizations such as NUL and NMSCC, that opportunity is shared and equitable. And that's why we all came together and came up with this amazing project that we're launching called Build Up Local. It's a one-stop shop for business owners in communities of color to learn about resources and programs made available through the bipartisan infrastructure law. So in the coming weeks and months, there's going to be more resources that are going to be added to builduplocal.org to help business owners of color understand the law, more information about what they can do to access programs and contracts, and resources to help their businesses thrive.
So Renee, in your interactions with these small business owners so far, I mean, what has been the biggest hurdle? What has impeded uptake, if at all?
Well, we know from the PPP when COVID first started that access to these kind of programs was very difficult. Many business owners were not ready. They didn't have EIN numbers. They didn't have relationships with banks. And so when these opportunities presented themselves, people were not ready to access them. We do not want this to happen again. So we've come together, we've banded together, if you will, and created this one-stop shop so that people can have a checklist to ensure that they have all the necessary items checked off their list for their business to have the access to these contracts. And then additionally, it's a portal where people can go and find where these opportunities lie. They're going to go down to the states, right? So the federal government is going to be releasing funding to states. And so people want to know, how do I find them? How do I find these access to contracts? coming to builduplocal.org, you'll be able to find and access those opportunities.
Hey, Renee, can you talk a little bit about what specifically these small businesses will have access to as a result of the bipartisan infrastructure law?
Yeah, so they will have access to federal contracts. So the Department of Transportation, for instance, is going to be able to release funding. That's going to be able to work to improve roads, bridges, railways, you name it throughout our country, right? Anything that touches infrastructure, broadband. We want to make sure that minority businesses are able to be part of that infrastructure sort of like creation of and fixing those resources. So this website, if you will, builduplocal.org, will be able to provide contact information of where they can go to their state and local municipalities, as well as the federal government.
Renee, I know this is the whole goal here, but how do you make sure that the funding is going to small businesses and those small businesses that need it the most when there are other larger businesses that can satisfy some of these opportunities in the bipartisan infrastructure law?
Well, that's the other part, and where advocacy is so important. We want to make sure that we're going to teach people how to become advocates in their own community, how they're going to be able to talk to their leaders that they elect, and making sure that they are in truly creating contracts that go to communities that really are able to have people in them doing the work. So we don't have to see people who are having these large firms coming to do the work, where there's smaller minority-based organizations, companies that could come in and do a great job as well.
And so, Renee, I mean, you've made the point a few different times that billions of dollars available here. But talk to us about the Infrastructure Investment and Jobs Act itself. Do you think that it goes far enough?
I think it does, to where we have never seen anything like this. The bill included a bipartisan amendment that made the Minority Business Development Agency a permanent part of the federal government and expanded its budget from $42 million to $110 million. And it created its first undersecretary. So that was a huge step in creating opportunities for minorities to be a part and to continue learning and getting access to resources from the federal government as well.
When you think about Build Up Local and sort of the staying power of it, what are you planning for? Like, how long are these funds going to last, and how long will you be needed as part of this? Because eventually the funding will run out, no?
Yes, that is true. And again, hopefully, right, the goal is that we won't ever have to do this again, right? We won't have to say that we need more minority contractors, because minority contractors will be able to have access to these resources and the government will be hiring them. So that's one goal. Then part two is, yes, the funds do run out. And we want to make sure before that happens that we're able to create opportunities for these business owners to connect. They're part of the pipeline, and that they're able to not only access contracts through the bipartisan infrastructure law, but they're also be able to get contracts through whatever legislative measures or whatever needs that federal, state, or local municipality may have in the future.
And Renee, we only have about 30 or 40 seconds left with you, but I am curious to go in a little bit of a different direction. You spend a lot of time, obviously, talking to small business owners. What are you hearing about concerns about the economy, about inflation?
So we have not heard concerns about inflation. We are hearing concerns about how people want to make sure that their businesses are still here. Again, COVID has impacted the small business community in so many ways. And before COVID, minority communities were already suffering, and it only increased the issues that many minority businesses were already having. And so what we want to make sure we do is provide resources, opportunities, and education so that we do not have to continue having the same conversation.
Renee Johnson, Senior Advisor at Public-Private Strategies, joining us via Zoom from Washington, D.C. A big thank you to Katie Greifeld for filling in for Carol Masser today. She'll be back with us tomorrow. For the entire team here at Bloomberg Business Week, have a great afternoon, everyone.